Hello and welcome to the FintechWire Innovators podcast. My name is Ed Medina and I'm the editor of FintechWire, an online publication covering the latest technology trends in banking, insurance, and securities. Today I have the two editors of this new site, Rachel Gore and Brent Waters. Rachel, Brent, welcome to the show.
Thanks for having us.
Yeah, absolutely. Thank you, Ed.
Rachel is the managing editor of InsurTechWire, where she covers the insurance industry and insurtech innovation. And Brent is the managing editor of Securities TechWire, where he covers the dynamic technologies and innovations in the securities and capital markets. To help us understand what we do here, we're going to talk about a couple of the main topics that we're covering. The first is generative AI and the introduction of ChatGPT. McKinsey has estimated that AI could add the equivalent of 2.6 to 4.4 trillion annually to the global economy. And in banking, which I cover for FintechWire, the tech could deliver an extra 200 to 340 billion in value annually if all these use cases were fulfilled. Those use cases include scale, customer value, and greater efficiency in almost every area of banking, so it will likely be a big shift for the industry. Rachel, can you tell us about Gen AI and insurance?
Yeah, of course. So Gen AI is definitely being talked about a lot right now in the industry. We've already seen some insurtechs pop up, even just in the last few months, with industry-specific solutions that are targeting various use cases. One of the use cases that I've seen come up more than once is improving underwriting. Gen AI models can analyze just huge amounts of historical data to assess risk and make these underwriting decisions, which has the potential to add a layer of efficiency and automation to underwriters' jobs. So it's something a lot of organizations are exploring. But there's also a lot of other use cases being talked about as well, like streamlined claims processing, loss prevention, product personalization. Mm-hmm. So those are worth noting as well and keeping an eye on as the technology continues to evolve.
Thanks, Rachel. And Brent, what have you seen in securities for Gen AI?
Yeah, it's fascinating how quickly generative AI has evolved. Really, you're seeing it on the client-facing side where significant use is occurring. The technology is being leveraged to offer enhanced customer experience, provide personalized financial advice, and answer customer inquiries, and of course, assist with transactional activities, which we'll talk about in a second here. But this isn't really new. It's just becoming more fine-tuned. And the large language models are becoming more sophisticated, so-called, robo-advisors, which use algorithms to automate the asset allocations for investors, began popping up around probably the 2008 financial crisis. But it has evolved pretty rapidly. And it's interesting, you have retail investors especially don't seem to have any hesitations about using the technology or trusting in it. There was a recent Consumer Financial Protection Bureau study that said nearly 1 in 3 investors would actually use artificial intelligence as their financial advisor. And you have another 31% of investors that would be comfortable putting AI financial advice into practice without even verifying it. So that's pretty significant. But I guess we'll kind of take a wait and see position to see how all that plays out. But you certainly have some of the biggest players in the market making huge investments into these types of initiatives. Take, for example, JP Morgan Chase recently announcing the launch of AI-based initiative Index GPT. So a lot of activity, especially by those large players.
Well, thank you both. To transition to another topic, I wanted to talk about open banking, which are rules that allow a customer to request financial data from their bank and then provide access to that data to a third party through an API. They have these open banking rules in the EU, but in the US, they're still being developed, and at stake is a $416 billion market opportunity for the global banking industry. What this all comes down to is data. It's required for all of those AI use cases that we just spoke about, so the thinking goes with more data and better access to it, opportunities will follow. So we'll look at ways that banks in the US are preparing for open banking, use cases like aggregation, payments, and credit options. We'll also explore some other platforms.
Yeah, that's fascinating.
So Rachel, tell us, what else are you working on in insurance?
Yeah, so one of the biggest areas that's really transforming the insurance industry right now and that I'm covering over and over again is really climate change. It's not really news to anyone that there's been a rise in the frequency and the severity of a lot of extreme weather events. We're seeing a lot of insurers pull out of particularly high risk and hard hit markets like California, Florida, Louisiana, rather than take on that high level of risk. But we're also seeing insurtech innovation in areas like advanced climate risk modeling, and some insurers are even turning to some really interesting GIS solutions. Aerial imagery, for example, like the use of drones, can help insurers process claims more quickly after a natural disaster happens by allowing them to assess property damage remotely before adjusters can safely visit that area that was just hit by a natural disaster in person. So there's a lot of really interesting stuff happening in that regard.
Excellent. And Brent, what else are you working on in securities?
Sure. Really, everyone's keeping an eye on May 2024. That's the deadline set by the SEC for the what they call T+1 trade execution for the U.S. as well as Canada. That means, you make a trade. Those funds need to settle the next day. And this is not a new movement. This time compression has been going on for some time. Prior to this, we moved from what they call T+5 to T+3 in 1995. We moved then to T+2 in 2017. Either way, it is a very heavy lift. And I really liken this to kind of what's going on now in the payments world, where you have FedNow and the same day ACH. You have a lot of the fintechs really building out platforms and schemes for real-time money movement. Same thing's happening here in the securities market, but this is really about reducing risk because you have counterparty risk, which is the risk that other parties in the trade might default on their obligations. And really, that's the big focus of this. And really, a lot of this effort is, for the holy grail of T+0. That is instantaneous same-day settlement. And that's what's coming on the horizon. But that's going to be a heavy lift because basically it would require a fundamental overhaul of the existing clearing, payment, and settlement ecosystem for the U.S. market. It's going to include clearinghouses, custodians, settlement systems, all requiring extensive modification or replacements to accommodate the accelerated sales cycle. So this is going to be a very heavy lift that's going beyond the existing players now and the investments being made, which are already significant. So keep an eye on that.
Well, thank you both. We release new podcasts every week at FintechWire, so check back here for new episodes. We appreciate you listening.